Hi all, welcome to yet another video of Indian Financial Service. The topic in this video we are discussing about the concept of leasing, then the advantages and limitations of leasing from the part of both the leaser and the lessee. So the concept of leasing is starting from the concept of leasing. Here the concept of lease is a contract between the parties, that will be two parties, that is a leaser and a lessee, for the hire of a specific asset. So there will be two parties are there, there will be leaser and a lessee. They hire a particular specific asset or a property, and there will be a duration, that is called a specific period, and for the particular period of interval they are acquiring a specific asset or a property. For acquiring that one, they are paying certain amount of specified rentals. So that is called a payment of rentals. So this is the concept of lease. So three things are there. One is there will be a particular party, they are taking some asset or a property. There will be a specific asset that they are taking and taking for a specific period of time. So for taking the asset for a specific period of time, they are paying some amount as specified rentals. So in addition to that, there will be another some what we are explaining some more detail about the concept of leasing. As we discussed in this topic, there will be two parties, there will be leaser and lessee. Then there will be a particular goods are there, and there will be a period of time will be there at the time of making an agreement between the two parties. There will be a specific period of time interval will be there, and there will be a transfer of right to use that particular asset will be there in part of leasing. So once we are giving the transfer of right, that will be on the basis of a fixed amount, that we will call it as a lease rental. Based on the recent agreement and the amount of lease rental, they are giving a right to use that particular asset or a property for a particular period of time interval. And here normally once you have a lease situation, it is an implied or a written agreement. Maybe sometimes it will be an implied agreement or a written agreement. You can make an implied or written agreement, and there will be some specifying conditions regarding the that is the use of a particular asset. That is, once you are taking the particular thing from transferring that one to leaser to the lessee, there will be certain types of conditions will be there. So the agreement is regarding normally the use of the particular property, and the length of time, what will be the duration of time that that asset is using, and what will be the amount of payment that will be normally if it is paying on monthly basis or weekly basis or yearly basis, what will be the payment of rentals. That is also will be there at the time of that particular contract. So in this is a terms of contract. Of course there will be, it is a terms of contracts. Of course you know the concept of contract. There should be an agreement that should be enforceable by the law. Of course that will be a contract. So lease is actually, it is enforceable by the law. So it is a there will be normal contractual terms will be there in case of leasing. And there will be normally if there is a situation of contract, maybe you know the concept of Contract Act. Then what will be the if the something is happen of payment or something will be delayed, or there is a false payment of a particular time period. So there will be the obligation that you are making for the false payment, failure to payment of that particular lease rental. So all these things will be there in cases of a contract agreement. So there will be an agreement between the contract agreement between the lessor and the lessee, and the agreement will contain all that things like what will be the asset that you are leasing, and what will be the duration that you are giving, what will be the amount of rental that you are paying for the particular lease condition. So all these things will be there in cases of that particular contract situation. So normally once you make a contract, the landlord has transferred a right to use the property or exchange for the payment of that particular rental. That is normally there will be a contract of agreement between the lessor and lessee, and here the landlord or the owner or the lessor has given the right to use the property. So how they are giving the right to use the property? In exchange for payment of rentals. Normally there will be an amount of payment of rental will be there for a specific period of time, based on which he gave the right to use the asset. And in that case, after that particular time period, he has three options. One is buying that particular goods. That is, once there will be an agreed period of time they are using the asset. After that, he has an option for buying the goods at a particular value. So that is one option, and another one, retain the property to the owner. That is a second option. That is, you are taking the property from the landlord and they are using it. You have an option for returning the property to the actual owner or the landlord. And the third option is extend the lease period. So once you are using the lease period for 1 year, so after 1 year you have an option for extending the lease period for the next 1 year or 6 months, or whatever it is, your choice will be there. So that is another option for leasing. So this is the situation. Once you can buy, there is an option for buying the goods at a particular value, and you can cancel the lease thing and you can buy it if it is permitted by the owner, or you can return the property to the owner and extend the lease period. That is, you have a particular time period. For example, you have a lease period of 6 months. After 6 months, you can extend the lease period to a certain extended time period. That is another option that we are giving. Then let us see one of the definition of leasing. As we discussed about the previous discussions, lease is a legal contract among the owner, that is a lessor, and the occupant, that is called lessee. So lease is a legal contract among the lessor and the lessee to grant a temporary possession or right to use the property. It is a temporary possession. He is giving a temporary possession to right to use this particular property. That is the option that he is giving. It is not a permanent one. It is a temporary possession to right to use the property. That is, some examples are there. That is a land and building, or a certain property, or a monetary compensation decided, and at the same time there will be a monetary compensation decided at the time of the agreement. So this is the definition of a lease. This is one of the definitions. A lot of definitions are there. This is a definition of leasing. A lease is a legal contract among the lessor or the owner and the lessee or the occupant to grant a temporary possession or right to use the property, that is a land and building, for a certain period, and monetary compensation is decided at the time of the agreement. So this is the one of the definition. If you go through textbooks and all, you can see a lot of definition. This is one of the definition based on the concept that we have discussed in the earlier part. And one more thing, if you come to the point of leasing, it will comes under the accounting standard 19. It will be in accounting standard 19. So let us see. We have discussed about the two parties are there. Let us elaborate who are the parties in leasing. Let us see, two parties are there, and one is the lessor and another one is the lessee. And lessor is the real owner of the asset. Lessor is the real owner of the asset, who can be an individual or a firm. So there is an option. Lessor may be an individual or a firm both the parties can become the part of a leaser. The leaser grant the right to use the asset. As we discussed earlier, a leaser is granting the right to use the asset for a fixed consideration over a period of lease. So, during the period of the lease period of time, leaser is giving the right to use the asset to the lessee. So, we are moving to the next part, that is the lessee part, who legally acquires the right. So, maybe we discussed that it is a contract between two parties, lessor and lessee. So, one who legally acquires the right to use the asset or equipment on payment of a particular that is called rentals are to be paid over a particular time period or a term. There will be from the part of these two parties, the leaser and the lessee. So, these are the two important parties for leasing. So, leaser is there and lessee is there. So, leaser is the actual owner of the particular asset, who may be an individual or a firm. So, leaser grants the right to use the asset for a fixed consideration over a period of lease. So, he is giving the asset to the other party over a period of time, and lessee is the person who acquires to use the asset for a particular period of time by paying that amount. That is what is called a lease rentals. So, we are taking the advantages and limitations. We are discussing the advantages and the limitations of both the parties, leaser and lessee. First, we going to discuss about the advantages of leasing from the point of view of a lessee. Let us see. So, this is one of the important advantages of a lease is avoidance of initial cash outlay. If you want to start a business, you need an initial capital outlay, especially there will be fixed capital and the working capital requirements will be there. So, fixed capital outlay in the part of acquisition of fixed asset like land, building, plant, machinery, etc. So, if you take something on some prop asset or some equipment or something on lease, they can avoid the initial cash outlay for spending such type of expenses. So, a lease may avail 100% finance from the lease financing and avoid initial investment in the margin money as required under loan financing. There is an option of leasing from the part of a lessee. Then the second one is minimum delay. Normally, if you take a loan from bank or any other financial institution, you have to go for so many formalities, like you have to submit a proposal for getting the loan. So, and there will be some lengthy procedure for getting the loan. You have to submit some type of security for getting the loan also. So, in that way there should be some sort of delay for getting the loan. So, if you are taking the goods on lease, you can avoid such type of delay. If you are taking loan from bank, normally, as you know, you have to go to bank, you have to fill the application form, there will be verification part from the part of the bank. If they are satisfied, only they will give the loan. Maybe sometimes it will be given as installments. So, this is another option. You can avoid that type of situations and formalities. And another one is, it is an easy source of finance. So, as compared to other financial situations, so long-term financing, especially it is an intermediate and long-term financing, it is an easiest source of financing options. And normally it does not require any mortgage of the assets because the ownership remains with the lessor. So, that is the important thing. So, if you know, even if you are taking the goods on lease, the ownership remains with the lessor and is not transferred to the lessee. So, there is no option of worrying about the ownership and all. It is always, it will be with the lessor. So, it is an easy source of finance. So, that is another important advantages of leasing. And another one is shifting the risk of obsolescence. So, normally There will be some areas where the technology is rapidly changing. Even you can see the changes in computer technologies, even electronic medium. You can see a lot of technological changes. So if you're buying some goods on cash and using it, if the technology is changing, so normally if you are that old machine or equipment that you are purchased, maybe there is a situation of outdating. So the outdating of technology can be avoided by the option of leasing, because you are purchasing, not purchasing the goods, you are taking the goods on a lease. So there is no risk of obsolescence. If it is if you are purchasing the assets on goods, there is a situation of obsolescence. If you are taking the goods on lease, so whenever it is outdated, you have an option for returning the goods to the owner, and you can take a new one with the new specific standard or a higher technological situation. That is another option that a lease have. And another one is the enhanced liquidity. So there is types of leasing. We will discuss in the next video about the different types of leasing situation, and there is one of the technique of leasing is sale and lease back. That is, the owner have an option for selling the goods to that is another party, and they can take it back on lease. So if we sell to an outside party and take it back, there should be the firm has to improve its liquidity position. So because they have they can avoid the improve its liquidity position and avoid the unnecessary amount that you are spending for acquiring a particular asset. Even if you have a particular asset with you on lease and you can use it, and you can avoid the unnecessary economic losses also. So moreover, there will be a problem of, maybe you know the concept of working capital. The concept of working capital is there are two important concepts, are the gross concept and net concept. So gross concept of working capital means current assets only. In net concept of working capital is the difference between current asset and current liabilities. So there will be, in concept of working capital, you know, there will be a situation of operating cycle. Means you have invested some amount, you have invested some amount for a production process. So it will be getting after a certain period of time. It will be varying according to the nature of that particular organization. Maybe in case of manufacturing industry, the length of operating cycle will be more as compared to a financial background industry. So that is because the length of, when the operating cycle length will be more, you need more working capital requirements. So if you take some goods on lease and if you are using it for your production purpose or your operation purpose, so you can manage your working capital cycle. You can manage your operating cycle. So that in that way you can enhance, you can improve the liquidity position of your firm. Then let us see the situation of the borrowing capacity. So normally the capacity of the borrowing capacity, if you are taking the goods on lease, your borrowing capacity will not reduce, because they are taking the goods on lease only. So you are taking the goods on lease only. So it is not considered to be hidden from the debt. So normally if you have a debt or a liability or something like, it will be there on the liability side of the balance sheet. So it is considered to be hidden form of debt. So it is a hidden form of debt actually. So it will never appear on the liability side of a balance sheet of the lessee. So that is the another advantages of that is a leasing process. So it will never affect, if you go for analyzing the debt equity ratio, that is debt divided by equity, that is ownership fund divided by outsiders fund. So that is debt divided by equity. So if you are taking the debt equity ratio, it will never affect, because it is not the part of your liability side of your balance sheet. So it will never affect the debt equity ratio of a firm. That is the another advantages in the part of a leasing. Then another one, let us see tax planning and differential tax advantages. So you can make a good tax planning process. So determining that normally there will be a situation of a tax payment. So there will be a tax payment situations there. So the leasing rentals are considered as a revenue expense while determining taxable profit. It is advantages for the lessee in minimizing the tax liability. So that is the important thing. It is a revenue expense while determining the taxable profit. So it is advantages for the lessee in minimizing the tax liability. In addition to that, the lessor, who is usually in a higher tax that is payment situation, benefit of depreciation advantages to the lessee in the form of reduced lease payments. That is another advantages is getting. So two advantages is there, and lessee can also adjust the lease rental in such a way that it reduces his tax liability and thus helps him to make a better tax planning process. So in case of lessee, it will be helpful for making a better tax planning process by going through all these important advantages. So that is the another thing. And another one is higher return of capital employed. So let us see, lessee acquires a particular thing without owning it. So he is acquiring it, but it is not owning. So it is actually the ownership part will be there in the case of the lessor. So it is, if you are acquiring something, it will never shown on the liability side of the balance sheet. So you are acquiring it, but ownership is with someone else. So it will never comes in your balance sheet. It will never show on your asset, in that asset side of your balance sheet. So that is the another advantages. So higher earnings against the capital employed and higher rate of return on capital employed. That is the another important advantages of a leasing process from the part of a lessee. Then the next one is convenience and flexibility. So you have an option for operating or service leasing. There is an option of cancelable clause. Cancelable enables at any time, if you want to cancel it, if you want to terminate it, there is an option for terminate it or cancel it, and you can return to the lessor. So if you are not want to use the particular asset anymore, so you can cancel it, you can return the asset to that particular owner or a landlord. So there is an option of convenience and flexibility. So that is the another advantages of this one. So moreover, it is very convenient and flexible mode of financing. Actually, it is as compared to so many mode of finance types of financing situations are there. So as compared to other financial situations, it is one of the convenient mode of financing situation. Then another one, and the 10th point is the administrative and maintenance cost part. So administrative and maintenance cost part, we see that there will be a part of administrative and maintenance for the asset that we have purchased. So maintenance cost is maintain the asset by the lessor in case of operating leasing. That is the important thing. And lease charges and maintenance cost are by a way of higher rentals. Lease over administrative and service costs are reduced because of specialized services of the lessor. So you can reduce your administrative and maintenance cost. If you are taking some goods on lease, you can reduce your administrative and maintenance expenses. So these are the 10 important advantages from the part of lessee. At the same time, there are some limitations or disadvantages from the part of lessee. So the first one, as you know, the high cost situation, there will be the cost factor, there will be a high lease rental is there, the cost of risk of obsolescence is important situation. So there will be a high cost because of the risk of obsolescence. So that is one of the limitations we know in case of leasing. And loss of moratorium period is there. There is no moratorium period. There is no take care of any gestation period or moratorium period. So if you take some loan, usually take long time before the asset generate funds to pay back it. That is another thing. So term loans, if you provides, there will be some sort of moratorium period in repayment for that particular. For that reason, there should be some sort of moratorium period is there, and there is a loss of moratorium period in case of leasing, and that is the important another advantages in part of the lessee. There is no moratorium period in cases of leasing. From the you are looking from the preview of the lessee, so loss of moratorium period is one of the limitations or disadvantages of the lessee. And the third one is a risk of being deprived of the use of asset. So if the lessee may be deprived the use of the asset due to deterioration in the financial position of the lessor or winding up of the leasing company. So it may be going to happen like this. There will be maybe of a financial position because of the financial position of the lessor, or the leasing company itself. It is going to, as we discussed, there will be an individual or a firm can lease option is going to wind up. There is an option for a risk factor. So that is the another limitation that we are seeing from the part of lessee. And as you know, it's actually the owner is the lessor, and lessee is not the owner actually. So if you want to make some changes for the particular asset, once the lessee has taken the asset from lessor, if you want to make some changes, there is no option for a alteration or changes in the asset. So the ownership is not with the lessee, so there is no option for alteration or changes of the asset. So that is the another limitation as we see, because it is only a contractual agreement between these two parties for a specific period of time. Then the another one is the loss of ownership initiatives. So there are certain advantages of ownership of assets such as depreciation, investment allowances, and there is no such benefit from the part of the lease agreement. So because the ownership is with the lessor, and there is no such options like depreciation options, there is no option of investment allowances in cases of a lease agreement. So this is the another limitations as we are seeing from the part of the lessee. Then normally there is a contractual agreement between two parties, the lessor and the lessee. So there is a duration is there. So you have to pay certain amount, that is called a lease rental for the use of that particular asset. If there is if you terminate that agreement, or there is a default in payment of such that period of time, so there should be a penalty, required to pay certain penalty if you terminated the lease before the expiry of the lease period. So this is the another one of the limitations from the part of the lessee. Then the another one is the loss of salvage value of the asset. Assets are generally used a certain salvage value at the expiry of a useful life. Normally, once you are using the asset, after using the asset, there will be a certain period we have certain amount of scrap value or a salvage value of an asset. There will be, you will get some amount of scrap value, and lessee is not become the owner of the particular asset. He cannot realize the scrap value or salvage value of that asset, even if the expiry period of after the expiry period of the particular asset. So the lessee has no right to claim the salvage value because he is not the owner of the particular asset. So that is the another advantage. So limitations of leasing from the part of the lessee. So let us see. We have already discussed the part of the lessee's side. We are moving to the next part. What are the advantages of leasing from the part of the lessor? See, in cases of lessor, there will be high profit situation. Actually, is sending the asset to a particular outside parties, and he will get a high profit for the agreement of a lease. That is the first advantage. And second one, he will get some sort of tax benefit. So some tax benefits such as depreciation, investment allowances, all these things will be claimed by the lessor and not by the lessee. So that is the advantages from the part of it. Is that ownership is with the lessor, so he can claim the depreciation, he can claim the investment allowance, all these things from the part of lessor. So that is you can have some sort of tax benefit also from the part of a lessor. And another one is quick return. So normally you will get a quick return in the form of a lease rental. As compared to investment or project, risk factor is high. Normally a longer gestation period or repayment period is there. So as compared to that, you will get a that particular amount as lease rental, that is in the form of installment. So there will be an option of a quick return and increased sales financing. That is a lease financing through third parties helps to manufacturers to increase their sales also. Their sales can increase. That is the option. So even if there is an option for selling it, there will be only limited buyers for the particular product. If you are selling on lease, there will be a lot of parties, they are ready to take it on lease option. So there will be an option for increasing the sales. That is the another advantages from the part of the lessor. So even if all these advantages, let us move to discuss some of the limitations or disadvantages for the lessor. And one is high risk of obsolescence, that we already discussed that point in the part of lessee also. The risk of obsolescence, especially if it is lessor, they are purchased some asset and sending that one to the lessee on lease. At the time it is the technology is obsolete, lessee will return the asset to the lessor. So after that there will be a difficulty of using it or giving it for a lease. So high risk of obsolescence. He is actually invested amount for purchasing the property. So risk factor is comparatively very high in case of a lessor. And the next one is the concept of price level changes. So the rupee received today is not worth tomorrow because the purchasing power variations. So price level fluctuation of price levels. So price fluctuations or price level changes will also affect the purchase and lease process of asset from the part of the lessor. And next one is the management of cash flows. So there will be a efficient management of cash flow is required. There will be cash inflow is you have to manage, and it is efficiently managing the cash inflow, and you can manage the purchase cost of the asset also based on the cash inflow. You have to manage the purchase cost by the cash inflow from the part of the lessee. So management of cash flow is one of the difficult tasks. So because we can't predict what is going to happen in the present day market situation, especially as we discussed some of the changes like technological changes, price level changes. So all these things will be affecting the management of cash flows. So these are some of the limitations from the part of lessor. So in this video, let us summarize what we have discussed in this introductory part of leasing. Lease actually it is a contract in which the lessor, there will be two parties, the lessor and the lessee. Lessor gives his assets to the lessee for a fixed period. Normally there will be a specific period mentioned in the contractual agreement, and there will be a particular monetary consideration also. That is a first and foremost point you have to remember. There will be a contractual agreement between two parties, the lessor and lessee, for a fixed period of time. So there is a contract that is accepted by the law. That is the most important thing. And there should be a monetary consideration for this particular type of contract. There should be, they're giving, the lessee has to give some amount of monetary consideration to the lessor for giving that particular, using that particular, not giving, using the particular asset. And lessee remains valid for the time mentioned at the time of signing the contract. So there will be a time of there will be a time duration for signing the contract. So the time duration is normally for a long period of time, that is more than 1 year. So normally there will be a time duration for a contract between the lessor and the lessee. So normally the time duration is more than 1 year. And another one, in case of lease agreement, the parties involved is, as we discussed about the lessor and the lessee. So two parties are there and two parties make an agreement. So that is enforceable by the law, and there will be a certain amount that you are paying for as a lease rental. So in addition to that, it is a responsibility of the lessor to take care and maintain that particular property or asset. So because the ownership is from the part of the lessor, it is the responsibility of the lessor to take care and maintain that particular property or asset. He is giving only that, the lessee can only use that particular property up to a certain specified period of time that you have mentioned in orally or a written form, that is based on written contractual agreement. So that is the another thing. By concluding it, in lease, at the end of lease contract, lessor gets an option to buy an asset by paying the contract value. There is a lessor and lessee is there. Lessor get the option to buy the asset by paying its current value. So these are the important things regarding the introductory part of leasing. We have discussed in this video regarding the what is leasing, the concept of leasing, and or the definition of leasing and parties involved in the leasing contract, lease contract, and what are the advantages and limitations from the part of the lessor and the lessee. So thank you all being watching this video of introductory part of leasing.